I was obviously caught the very first hotel, right? You're mortgaging your house. Sorry, you sold your house, rented, so that you put all of the equity from your home into your first hotel. I mean, if that's not risk and guts, I don't know what is. I'm not sure everybody appreciates that.
People thought I was crazy.
You were crazy. Would you recommend that to anybody today? Welcome to Teague Talks. I'm your host, Teague Hunter. Today we sit down with Carlos Rodriguez Sr., Chairman and CEO of Driftwood Capital. We're going to hear about his journey from Costa Rica to hospitality, find out what it's like to start a fund, and hear what Driftwood is up to today. Carlos, thanks for joining me today. You're a good friend. I'm excited to do this.
Likewise. It's good to see you.
You've got, I know I say this a lot, but you have one of the compelling stories in this industry. I love your story. I love your background. I love how you got in this. It's kind of like all of it, but it's very unique too. So I can't wait. Thank you for coming on and sharing it with us.
My pleasure.
Where are you today? You look like you're in the Miami office.
I'm in Coral Gables. Yeah, in our office at Coral Gables.
Is it not time for you to be in the Highlands of North Carolina right now?
Actually, after Father's Day, I'm moving to my house in Highlands, and yes, I have an office there, so I can work via Zoom for the summer months.
Yeah, that's right. Escaping that Miami joyous summer, right?
That is for sure. Though I like boating, so I'll be coming back every now and then for boating. But yes, I'll be working out of my office in Highlands.
I love your story. You're a Miami guy. We all know this. Like, that's your thing. But I like that you found the North Carolina mountains.
Oh, I love it there. I love it there. As you know, I went to Duke, so I fell in love with that state a long time ago as a student. And, anytime I have a chance to go back, I go. And we have hotels there, and we keep buying hotels there. So, good excuse to go back to a state that I really love.
More and more excuse. All right, this is great. That's a good segue. Let's get into it. So I want to hear all things Driftwood. I want to hear your thoughts on the world today. But, of course, I got to know how you got into this business and how you got started. So give me the grow up. Give me a young Carlos Rodriguez Sr. growing up in Costa Rica. I'll let you take it from there. Go ahead.
Sure. My mom was American and my dad was Costa Rican. So from birth, I was dual national, American and Costa Rican. I went to American school in Costa Rica, grade school and high school.
Wait, how did they meet? How did they meet? I'm interrupting you already. How did they meet?
No worries. No worries. My dad actually was a very good basketball player. So he played for Ole Miss. And in Mississippi, he was a starting player in the basketball team for the university. And my mom was from Mississippi. So they met there. And, they eloped and moved to Costa Rica. So anyway.
What year? You don't hear that. In what year? You don't hear that often.
Oh, that was in the 40s.
Yeah.
My dad was one of the very first, if not the first, Latin to go to Ole Miss. So not only he was one of the first, if not the first, Latins going to University of Mississippi, Ole Miss, but also a player, playing basketball. So they met, and my grandfather was a judge in the little town of Raymond, Mississippi. And so it was interesting times, for a Latin to be courting a Southern belle, let's put it that way. And but they fell in love, and they moved to Costa Rica. And that's where I was born and raised. As I said, I went to American school from birth. And then when I finished high school, I went to Vanderbilt undergraduate, and then I went to Duke business school. And quite frankly, all my life, I never thought I was going to be able to live. All my life, I wanted to be an investment banker. So when I graduated from Duke, I went to New York. I got offered a great job in New York, and I went into investment banking. But unfortunately, I had my dream job there. Unfortunately, we had a death in my family. My brother died, and my brother was running our first hotel, the very first hotel that we've done, which was a Holiday Inn in Costa Rica. It was actually the very first Holiday Inn in Latin America. And my brother was running it. So when my brother died, very young, who was 33 years old, my dad called me and basically I came over and he asked me to help him out. And how do you say no to your dad when you've had a family tragedy like that, so unexpected? So I resigned from my dream job in investment banking and I moved down to Costa Rica. I convinced, at the time I was engaged and I convinced my wife, to join me and move down to Costa Rica with me. And, I got into the hotel business sort of by force because the hotel was in distress in the 80s. Latin America had a lot of economic issues and, that was affecting everybody. And our hotel was in distress. So basically I took over that and it grew on me. I mean, I fixed it up. We got lucky and we turned it around and made started making a lot of money from it. And the hotels business and the industry in general started growing on me. So I said, you know what? It ain't bad. And actually, I still remember to this day, it's a funny story that I rarely tell. Back then, the president of IHG of Intercontinental Hotels, or in that time it was called Holiday Inn, was Craig Hunt. I don't know if you remember Craig.
Yeah.
But Craig Hunt had become a buddy of mine. I met him, and he invited me to a dinner. And we went to a dinner with like 6 or 7 other franchisees of Holiday Inn. And when we started introducing ourselves, one guy said, I own 20 hotels. The other one said, I own 13 hotels, 30 hotels, 5, 7, 8 hotels. So I turned, and at the time we only had one. So I turned to my wife and says, you know what? None of these guys are rocket scientists and they've all made a ton of money. So this might not be a bad industry. Maybe I should stick around. So
I've heard that story before. I've heard that one a lot.
So because really, truly, they were not rocket scientists. I mean, they were not dumb, but they were not rocket scientists, and they were making a lot of money. So it's like, you know what? This is something that has legs, and I'm starting to like it. So I did a couple of more hotels. I did another hotel with my dad in Costa Rica, and then my dad decided to retire or to slow down, I should say. And I didn't want to compete with the family. Plus, Costa Rica was a very small market, very small and poor market, frankly. So I said to myself, you know what? I should move to the States where I can grow. And actually, again, Craig Hunt and the people from Holiday Inn at the time said to me, Carlos, why don't we do something for Latin America together? Holiday Inns and you. You've proven that you're a great operator. You've turned around the hotels that you have in Costa Rica, the 2 hotels. And why don't we join forces? I like the idea. So I said, let's do it. So the plan originally was that we were going to do one type of each hotel Holiday Inn had at the time in Miami and use them as a showpiece to convince Latin Americans to hire us to basically use the brand and hire us as a management company. And I would basically be the one running it. I liked the plan. I certainly didn't have the money. And with Holiday Inn backing, that was great. So I moved to Miami and I relocated with my wife. And so everything was going well, but then Holiday Inn changed chairmans and CEO. So when they changed the chairman and the CEO, they changed their whole strategy. They said, the new chairman said, we don't want to spend more money or invest in Latin America at that time. So here I am in Miami with no backing. And, I said, you know what? I still like the idea. I still like the plan. And I'm just going to go on to my friends and family and raise the money for a hotel and then a second hotel. And still use the same plan to sell as a showpiece the hotels around Miami Airport to wealthy Latin Americans, so they would hire me to do hotels in Latin America. So I did that. I started with my first hotel. It was tough, I can tell you, because obviously I had to raise money from friends and family that had seen what I had done in Costa Rica and that trusted me to invest in the first hotel. But by the time I opened the doors, I was down to my last $500.
Sure.
And so I had a lot of sleepless nights, I was down to $500. I had my kids in private school. I had sold my house. I had sold everything. So I was renting, a house at the time. So, I was in economic straits. I was in a tough position. But thank God, the hotel that I did gangbusters. From day one, it opened full. And it never looked back. It continued full. So I still remember the first dividend check I got like 2 weeks later of like 10 grand. I should have, that was like I was feeling like awesome. This like I got 10 grand, But anyway, long story short.
What year was that? What year was this?
This was I opened the first hotel in February 1998. February 1998. And, the success was so good that everybody said, hey, let's do more. So I did a second, a third, a fourth, a fifth hotel. And by that time that I did the fourth and fifth hotel, raising money from a lot of friends and family, I realized and I said to myself, you know what? Forget Latin America. Doing business in the US is a hell of a lot easier. Raising capital, borrowing money, the rules of the game, the laws are stable. I'll leave Latin America for another day. I'm going to focus on the US. This is a hell of a lot easier to make money here. So, I kept growing and I did 7 hotels this way. The problem was that it was always people were saying, and Carlos, how much are you investing? So I was up to here in debt because I was borrowing money to try to, keep investing because for some reason, nobody would write a bigger check than the check that I was writing. So I was very limited. It was very constraining to be able to do it all. So then, a small group came and said to me, I like your story. I like what you're doing. Let me take you public. And I said, well, we're very little, are you sure that you can take us public? And they said, yes. So the little bit of money that I had accumulated and been able to do from these 7 hotels, I put into trying to go public. Unfortunately, my timing couldn't have been worse. I mean, I finished getting ready for going public September 1st, 2001. So 9/11 happened, the roadshow got canceled, and now here I am once again with, on one side, nobody traveling, so the hotels being in a tough position cash flow wise, and me having spent my last dollar trying to go public. But there was a saving grace. Lehman Brothers had heard of me, and they introduced me or the team, to David Budmar from Driftwood Hospitality Management. David and Lehman had formed Driftwood Hospitality Management as a platform of Lehman, and David and several partners, Mike Diaz and Peter Walls and Steve Johnson, they all owned half of the company. The other half was Lehman. So they came knocking at the door to buy a hotel out because I was trying to see how in the hell I was going to make things work. And so I was willing to do anything, sell a hotel, do whatever. And at that time, we found out we had chemistry, that we got along, and that we could work together. So instead of selling a hotel to them, we ended up merging my company into Driftwood. So that's when I became partners with Lehman and with David Buttermeyer and what I would say his lieutenants. We joined forces and became partners. And from then on, frankly, we haven't looked back. I mean, with Lehman, we had all the money in the world to make to buy deals on one side. Plus, having the Lehman name at the time was very helpful. And, all their hotels in problem were their hotel doctors. Actually, the nickname they had for us was we were their Geppettos. So basically, we fixed their broken toys.
Of course.
So we made a lot of money and we grew tremendously from the time I merged, which was in 2003, until Lehman's bankruptcy. And then we went through 2 years of hell under Lehman's bankruptcy because, we were very small in the big estate of Lehman. So they weren't paying attention to us. So we bought out Lehman, we bought out Lehman's interest, and we came in as a much smaller company, but now 100% owned by us. So that's when I told my partners, I told David, look, I like Wall Street. I'll continue to do business with Wall Street. We have good friends there and we have a good reputation with them, but I don't want to depend ever again on one source of capital or on Wall Street. Wall Street is too fickle. It'll think long term, So I want to go back to my roots of raising money from friends and family, because while we'll do business with Wall Street, I don't want to depend 100% on them ever again. So we started doing that, and we did very well. We did very well with a lot of different friends and family syndicated deals that we did. But it was not scalable. It was a situation where, I felt like a used car salesman because I was always the guy that brought in the capital, that raised the money. David, was more in the operations end, and I was more in the raising the capital and dealing with investors and dealing with the banks. And, the problem was it was not scalable because, and as I said, I felt like a used car salesman because, we found a deal that we liked. We had 30-day due diligence. In the 30-day due diligence, I had to raise the money and get the loan while I was doing due diligence. And, frankly, if you go to your friends, it's one thing because they trust you and they'll write you a check. But it's not scalable when you go to people that don't know you. So when you go to people that don't know you, you say to them, here's the deal. And by the way, you need to write me a check in 2 weeks or 3 weeks. They're going to say, forget it. First, I need to do due diligence on you. And then we need to do due diligence on the deal. I ain't writing a check for 2 or 3 weeks. And that's if you're lucky enough that they put you in the front of the line of the stack of deals that they're looking at. Chances are that you go to the bottom of the pile. So, we realized very soon that while it was good and we could make money, it was not scalable. So my son joined us, and he had been working for Illinois. And he and I came up with the idea of creating funds and raising money as a GP, where we would basically buy the deal ourselves with our money. And then we would turn around and sell pieces to investors. And that made the whole world of difference. And quite frankly, that's when we started scaling and as fast as we used to be with Lehman and start growing at a very fast pace with the funds. So then we created what we call now is named now Driftwood Capital. And we now have 4 divisions, of which I'm the chairman and CEO. We have the original division, the Driftwood Hospitality Management, which is the management company, which David Buttermeyer continues to run. And all divisions report to me, but David is running that division, the management company. Then we created the acquisitions division that basically buys existing hotels and fixes them, creates value and fixes them, but it's existing operating hotels. We created another division that develops hotels, and we created a division that lends money to hotels. So as a result, now we're very well capitalized because now I have money to fund key money and buy management contracts, management companies, whatever we need to do at the management level. But we also have, for example, right now I have $1 billion under development, which quite frankly, in today's environment, people get astounded that we have that much money in development, but because we're well capitalized now. And then we have an acquisition arm. The acquisition arm is a little bit slow today because of the hurdles that there are in today's environment. I mean, in high interest rates and quite frankly, people haven't lowered prices as they should. So normally in a typical year, we buy 5 to 8 hotels. The last 2 years, we bought 1 hotel a year. It's not for the lack of trying. We've continued to analyze 200, 250 deals, but we've been very selective. We're very in that thing. We're very, very, how should I say, strict about following our own guidelines. I'm glad. I prefer to wait and find the right deal. And if there's a right deal, we'll write the check. And if there's 10 deals that we like, we'll write 10 checks. But the problem is we've only found one a year so far. We just bought the Marriott in Raleigh, Durham, the Research Triangle, and I'm hoping to find more, but it's been tough. The other division is the development side. We're doing gangbusters, and that's because of the strategy that we've taken, which is a very cool strategy. Where basically we come in and as white knights, we come into developers and say to them, if you don't have the capital, we'll bring you the capital. If you need the hotel expertise, we'll bring you the hotel expertise. We'll bring you the financing. So a lot of hotel developers that have already gone through the entitlement process have spent several years working it. Basically, we come in at their cost, and we come in at the end and save ourselves all those years of work.
Wow.
And we're basically coming in at the last minute and saving them, for which they're grateful. And we can develop from there. So that strategy has worked very well for us. And we have several deals in the pipeline of that nature, where we come in as white knights. And that's why we have that big pipeline. The other arm that has been very active is on the lending side. On the lending side, we've been very, very active. In the last month, we've placed well over $100 million of loans on the mezzanine side. But there we have a Chinese wall. We don't lend to ourselves. We only lend to third parties. And that one is doing gangbusters. Runs like a little Swiss watch, where our investors get a dividend on a quarterly basis, and it's extremely liquid. The loan terms are 3 years, so it's very liquid and very turnover. We're in the fourth fund there on that one. So all the divisions report to me, and basically we're 3 managing partners. It's David, myself, and my son Carlos Jr. And we work all 4 divisions, and all 4 divisions are going very, very well. I'm very excited for the future and the growth and what we've been accomplishing, but especially in this tough environment, in this very tough environment.
Carlos, that is a phenomenal summary of it. And I love all of the stuff you just said and all the experiences you've had. We could cut it right now, mic drop, call it a day. That I love everything. I was obviously caught. I mean, I've seen all of that and I love it. I was obviously caught the very first hotel, right? You're mortgaging your house. Sorry, you sold your house, rented, so that you put all of the equity from your home into your first hotel. I mean, if that's not risk and guts, I don't know what is. I'm not sure everybody appreciates that.
People thought I was crazy.
You were crazy. Would you recommend that to anybody today?
I tell people that if I was trying to start today and try to do what I did back then, I don't think I would be able to do it. Regulations are tougher. Getting permits are tougher. Getting a bank loan. I mean, for God's sake, I'm a new kid because I was in my 30s that had never built a hotel in the United States, had never operated a hotel in the United States, telling a bank to lend me money, where my basically personal net worth was not even close for me to give a personal guarantee that was worth anything. Frankly, in today's world, no bank will lend me the money.
Right.
Nobody would pay attention to me.
But I do think timing is obviously important in life. And you never know. You never know till hindsight. But when you started in the late 90s, right, private equity wasn't really a thing. It certainly wasn't investing in hotels. So you couldn't go work for Blackstone or Driftwood today. So you just had to start it on your own. This is what we did. Today, correct. Okay, 2024, you would go work for Blackstone or Driftwood. You go work there for 6 years, learn everything you can, and then you go take the risk if you think you got the gumption. Exactly. And you go.
That's what I will tell my kid. Actually, well, my kid joined me, so he's my right hand now. He's the president and CEO of the company. But that's what I would tell him. Hey, go and work for somebody, learn, do your thing, and then come in and do it. But I was a babe in the woods back then.
How do you think you'd be different if you hadn't if the collapse of Lehman hadn't happened? If Lehman would still be your partner, how do you think life would be different?
Oh, wow. That's a good question. I have never thought of that. I mean, look, let me tell you, with Lehman Brothers, we had it beautiful because anytime I found a hotel that we liked, they would finance 70% of it and they would put 95% of the equity. So us, the other 50% partners of Driftwood, would only have to put 5% of the equity. So to give you an example, on a $100 million deal, our side of the equation would only have to put $1.5 million. So we could do a lot, especially with the balance sheet of Lehman, because this was not the balance sheet of this was not the customers of Lehman. It was Lehman's balance sheet that was doing this. So frankly, life was beautiful. We were printing money. We were doing very, very well until the rug was pulled from under us. With that said, it was a tough experience, and it was is it what does it kill you makes you stronger? Well,
Yep.
it definitely makes us stronger. So I guess I don't know where we'd be. It's funny. I still remember my partners and I, right before Lehman went under, had gone to the Ritz-Carlton in Mark, in what do you call here, Naples, and we're celebrating all the successes we had. And I'm telling you, like a couple of weeks later, Lehman goes bankrupt. So it's like, oh my God, you never need to, you need to be careful about what you're celebrating. So I don't know. I mean, we've definitely grown a lot, but frankly, at that time, we were growing a lot. The one thing that is different is we owed everything at that time to Lehman. Lehman called the shots. And that's a big difference from today's world, because as a result, Carlos, David, and I call the shots.
Right.
We control our destiny. And the fact that now we have multiple sources of capital, multiple channels of distribution, frankly, it's nicer. We don't owe our lives to anybody. And we're independent. We basically control our own destiny. And that is nice. That is different. But we were making good money with Lehman. Don't get me wrong.
Talk to me. Let's go. I just love the pivot, right? You were forced to, so you did. And you went back to your roots. So talk to me about the investment. I'm trying to get in pretend I'm an investor, right? I mean, but one, so I know you've got sort of all. You've got some institutional. You've got, I'm going to call mostly high net worth. You still got your Latin investors. What are they thinking? Maybe even pick on the Latin investor. What are they thinking? Is it their opportunity to get into the United States? Is there a dollarization in there? They just love hotels. Give me that mindset.
Well, first, it's funny. We're like a mini United Nations. I have 34 countries that investors from 34 different countries investing with us. And half the money comes from the US, half the money comes from abroad. The money from abroad, from Latin America, it has different objectives from your typical American investor. Objective number one, I would say to you, is security. Making sure that they have an insurance against anything that might happen in their country. They don't want a repeat of Cuba or of Venezuela happening to them. So basically they say, you know what, I'm going to have this pocket of money outside, and they believe that the United States is the safest country in the world to invest in. So number one objective for that group of investors is, who can I trust to keep my money secure and produce for me? And that's my insurance policy against anything happening in my own country. So that's, something, a frame of mind that these investors have. Obviously, they're looking for returns, but they have a longer term perspective. And that's where there's a difference between the family offices and high net worth individuals and the institutional investors. The institutional investors, they want a path to liquidity. They want, 5-year terms. And when you surpass 10 years or 7 years, that's too long for them. That's just too long. So that's a different frame of mind from the Latin American investor that's saying, hey, as long as you're giving me a good dividend and you're giving me good cash flow, keep it be. My number one objective is security. And yes, give me some cash flow, give me some dividends, give me a good return. obviously they're not dumb, so they're looking for good returns. But it's a different frame of mind that they're coming from. So, and that's a balancing act for us because we do have institutional investors and we need to work with them, but we also need to work with the people that are looking for long-term growth, So
When I invest, and again, you're a great option for them to get exposure to the United States with, in theory, someone they trust, someone they like, someone who they can relate to. With your investors, I'm guessing it's different platforms. I don't give you $1 and then you pick, but I pick whether I'm in the debt fund, the development fund, the equity fund. Is that correct?
So we give them all sorts of opportunities because you can invest in a single deal, what we call a single purpose entity. So you can come in, we pitch to them and say, I live in an eternal roadshow.
Yeah.
I am, frankly, most of my time is dedicated to investors and to basically pitching deals. So I'm in an eternal roadshow. So we pitch to them several things. We pitch to them individual deals. Like right now, I have a deal in Mission Valley where we're building a Element Hotel by next to our Marriott in San Diego. And that I'm pitching that one individually. I have a Hilton in Plano, Texas, that I'm pitching to them individually. But we also pitch funds. So for example, I mentioned earlier, we're in our fourth fund of the debt fund. There, we put together a package of loans that, by the way, everything we do, we always retain control. And everything we do, we always keep 10% of the investment. So we always have skin in the game. But we initially own 100%. So the loans, we package them, we own 100% of the loans, but we sell 90% and we continue to control it, continue to own 10%, and we continue to service it. So we package the time deals. Right now, I have a Space Coast fund that we're syndicating, a hell of a deal, a really awesome deal. And that one is a fund of 4 hotels. So you can choose to invest in the Plano, Texas. You can choose to invest, that's a hotel that exists. You can choose to invest in a development deal like Mission Valley. You can choose to invest in a fund like the loan fund that I'm telling you, GMP4, or like the Space Coast fund, or an individual deal, OpZone deal, the Dream in Miami. So we have options at all times for the investors. And you say, I want this much in this one, this much in this other one, or I don't want it, I don't like it, and that's fine with us. But we're constantly pitching.
And I bet you have lots of repeat investors. How many total? Give me a guess. How many total?
We have well over 1,200 active investors, and I have them for all walks of life. I have from multi-billionaires with large, family offices and, very, very sophisticated investors. I have obviously institutional investors, and then I have, lawyers, architects, engineers, dentists. I have everything, And again, 34 countries.
Who's the easiest and who's the worst to deal with?
What I'm finding, it's the more sophisticated and the larger they are, the easier it is. They understand the ups and downs. They understand the cycles. And, it's easier. Now, to get them to invest is tough, because they ask a lot more questions. But once they're in and once they trust you, frankly, the larger the investor, the easier it is. Going back to my very beginning, I still remember to this day when I was raising my first hotel and my first 5 hotels, I would party and be so happy when somebody would write me a $25,000, $50,000 check. To me, that was like all the money in the world. Nowadays, I get investors coming in and putting $10 million, $5 million, and sometimes I don't even know them.
Carlos, this is incredible. Thank you. Give me your crystal ball. Let's talk today. What are you seeing out there in the world, whether it's interest rates, whether it's opportunities, both acquisition, but also sort of your legacy stuff, hanging on to what you've got? Give me what your crystal ball looks like for the foreseeable future.
Thank God we're in a great position economically. We're strong. So frankly, we have no issues internally. We're actually seeing a lot of opportunities. Like I said, we're placing a lot of money in the lending side. We're looking for acquisitions actively. We have $1 billion in development. Our management company, I have war chest ready to buy another management company if it shows up. So if you see any management company for sale, I will love to, take a look at it. But so from a personal perspective, we're in a great position to pounce on any opportunity that shows up. That's on a personal basis as a company. With that said, I do see a lot of challenges in the market. With, the interest rates up and with the, inflation the way it's been in the past and insurance premiums going up and payroll issues in the sense of finding people, unemployment being, so low. There's a lot of challenges in the market. Banks in general have retrenched from what they used to do. They're being tougher to lend. You need to have a good track record, and they don't lend as much as they used to. I mentioned before that a bank will lend me 70% on the development deal. Nowadays, you're lucky if they give you 50, 55%, and then you need to find that mess piece for the balance to bridge the gap. So I find the opportunity, the current environment very challenging, which, quite frankly, feeds into companies like us that have the firepower to be able to do things. So it's an interesting opportunity, but yes, I see more hotels because look, during the pandemic, a lot of the brands closed their eyes and said, the pips, don't worry about them. We can hold back. But now they're calling back and say, hey, now we need to, they're being stricter and say, hey, now you need to fix them. So that's one issue that is hitting a lot of hoteliers. A lot of maturities are taking place, and a lot of hotels are not meeting their tests. Yeah. So I foresee, I don't know how many, but I do foresee more hotels coming to market, in a somewhat of a distressed situation in the near future. So I see opportunities for companies like ours to come in and either be a white knight and do a joint venture or buy them out or lend them the money, as a mezz lender. So I see a lot of opportunity for us, but I do see a lot of hotels coming to market, a lot of need for refinancing. A lot of deals for new development are not penciling. Therefore, existing hotels should do better in the next few years because construction, is not going to be as big as it used to. I mean, I see very little development taking place in the next 5 years. So it's interesting. Now, if you have the firepower, you should be able to find good opportunities at the near future. I'm telling you, on the lending side, we've been lending right and left. I mean, it's unbelievable the amount of demand that we have for borrowing. Acquisitions, I believe that we'll start seeing deals, but there needs to be adjustment in prices. And sooner or later, sellers are going to have to adjust. I believe this is a buyer's market, not a seller's market. And that's how I see it. It's scary times. I mean, a lot of people, and I see it. My investors, they trust us. They like our track record, and they know that we are very, very. We follow our guidelines very strictly, so they continue to invest with us. But I see the investors being apprehensive. I mean, with what's happening in Israel, what's happening in Ukraine. And quite frankly, what's happening in our own country with politics and the country being so divided and the Fed having such high interest rates, people are apprehensive. It is not, so that's what I see.
Amazing. We agree with you on the transaction side. We're as busy as ever, and we're starting to see the opportunities, and it's just hard. It's really hard to get deals done today. So you need to be well capitalized. You need to be and candidly, the more well capitalized people are not always the highest price, right? Mm-hmm. So do you want to take a risk on that person that may not have the wherewithal to get your deal done, or do you want to take the sure deal at a lower price?
Correct.
We're always that way. That's the norm, but that's where we are, and we're starting to see the stress coming as well. To your point, banks that want to pay down, people that have a loan come due that can't refinance, that have to take it to market. And the age old, I got a PIP I got to spend, and I don't want to do it.
Exactly.
So
Exactly.
there's always those. All right, this is fantastic. Thank you. Closing, but I want to move on to family. I know you work with your son. What is it like working with Carlos Jr.? What's it like working with family?
Frankly, he's been phenomenal. I couldn't be more proud of him. I honestly think he's ready to take over, whenever I get tired of doing what I do. The problem for him is that I love what I do. But I spent my life practically training him, and he's ready. He's done a phenomenal job. Frankly, if something were to happen to me tomorrow, we wouldn't skip a beat. I mean, he could take over tomorrow, and people wouldn't even miss me probably. So I'm very happy with how he's developed as my son. Now, does it have its challenges? Of course it does. When you have somebody that reports to you, if he's not your son, they don't answer back. When he's your son, they do answer back. If they disagree, they let you know. So it does have its challenges, but it's all good. I mean, I think he and I have a very close, very good relationship. I love him to death, and we get along great. And it's nice coming in every day and spending time and seeing him. Not every father is that lucky. I mean, some fathers have their kids elsewhere in the country, and they just don't get to see them as often or to get to talk to them as often. I travel with him. I work with him. I see him every day, talk to him every day. So that's nice. That's a blessing. That truly is a blessing.
And he's a great guy and talented individual in his own right. So you guys are lucky to have each other.
Yes, yes.
Carlos, this is fantastic. Thank you. Big cheers to you guys and the entire team over there. Thank you for taking the time to share your story with us. I love it. This is why I wanted to do this.
I love the friendship with you and with your firm, and I appreciate the time, and it's an honor. Thank you.
No, all ours. I'll see you soon. Take care, and hopefully in North Carolina, not Miami.
Hopefully, yes. All right.
Thanks, Carlos.